Hello, everyone. Today on the final bar, I'm joined by options expert Dan Passarelli, giving us a window into how he's looking at one particular name. The S&P overall finishing pretty strong, closing above 3,700 for the first time. So what does that mean for the overall trajectory of the markets, with mid caps and small caps continuing to push to the upside, lead the way higher, energy back recovering, followed by healthcare? Overall, we're going to look at that, also answer some of your questions from the final bar mailbag, dealing with a variety of different topics. Ladies and gentlemen, this is the final bar. Hey everyone, welcome to the final bar. I'm your host, Dave Keller. I'm the chief market strategist here at StockCharts.com in a rainy Redmond, Washington. Thanks for joining us every weekday after the close as we look at the technical themes of the day through the power of StockCharts.com. Focus on the key patterns, breakouts, breakdowns, reversal points, trends, et cetera, built on investor behavior and psychology. We have a really great guest here, Dan Passarelli, joining us for the first time from MarketTaker.com. Excited to hear his take. We really have been trying to bring more options experts on the channel based on feedback that we're hearing from you. So excited to get Dan's take on one particular name. Overall, this market has been it's been a path of least resistance sort of thing. It's not exploding to the upside. It's not failing by any means, just sort of chipping away further and further to the positive side. But the S&P closing above 3,700 for the first time, which is pretty significant. Getting on to the upcoming schedule, we have some great guests. Again, Dan Passarelli today. Tomorrow we have Chris Vermeulen. On Thursday, sentiment expert Mark Young coming back on the show. As a reminder, our special year-end series of events called Reflections 2020 starts on December 21st. We're going to take the last 2 weeks of the year and just inundate you with ways to think about this year, try to process it, get your head around it, and start preparing for 2021. So 3 buckets of content you're going to find from us. We have 10 experts providing their top chart of the year, so a 10 and 10 over the course of the 2 weeks. We have a second group of discussions focused on year-end performance. So I'll be doing a presentation on how to think about your performance and supercharge it for next year. I'm going to talk with Keith Fitzgerald later today about that topic. We have Gaddis Rose doing one in that series as well. And then the third one is all about sector rotation. We have Julius DeKempener, our sector expert, focusing on the 11 sectors and how they've rotated this year. And then have a couple of analysts really focus on particular sectors and do a deep dive and talk about the themes you should know for next year. It's going to be a really great opportunity, I think, to reflect on 2020 and get ready for 2021. Let's get to our market recap. I did want to start with a poll that we asked you recently. As you know, on stockcharts.com/TV, we always have a poll running. I'd encourage you to respond anytime you see it. This was a bit of a quiz on your behavioral finance knowledge. Know your behavioral biases. Which bias deals with the fact that your investment performance looks better and better in the rearview mirror? And I'll tell you, this is the closest I've come to tripping up Final Bar Nation in your responses. 33% of you incorrectly answered confirmation bias. 51% of you correctly said hindsight bias. So this is absolutely right. Hindsight bias is where basically the further things get in the rearview mirror, the further time goes back, you feel better and better. You sort of optimize your own historical performance. If you think about it and you imagine yourself having the perfect sell call right at the market peak in February and then buying like a champion right at the low in March, you're probably subject to hindsight bias to some degree. Even though you might have been that perfect, most likely you are not. Confirmation bias is similar in the form of that it's incorrectly thinking about things, but it's more forward-looking. Confirmation bias is where you decide I'm bullish or you decide I'm bearish, and then you start gathering evidence, and basically you essentially validate what you've already decided instead of gathering the evidence and making your decision based on the weight of the evidence. Both not ideal, and developing ways, routines, methods that you can use to minimize their impact are pretty key. Let's get on to our market recap. As I mentioned, the S&P getting above 3,700 and staying there today, which is impressive. It had traded above it before, but not able to close things off. Mid caps and small caps up a little more. The small cap index probably the most impressive of the three, finishing stronger, almost 1%. And that idea of small cap outperformance has been emerging for quite a while. And I would encourage you to be thinking a little further down the cap tiers. We've transitioned from a market led by the FANG, the FANG man, whatever stocks that you would call that group of FANG stocks, the sort of large cap growth, mega cap growth names. We've rotated away from their leadership and into other places. And today you have energy number one. You have small caps outperforming, and I would certainly encourage you to think through those sorts of spaces. The VIX getting closer and closer to the 20 level, but not quite there. About 2050 today. Bonds actually stronger today. So we've had this mean reversion of sorts in the fixed income markets. The TLT has been in a pretty good downtrend, but moving higher again today. It's after rising yesterday. 10-year yields just above 90 basis points. On the commodity side, pretty impressive run overall, especially with gold and silver continuing on from the strength from yesterday. So overall, we talked yesterday about gold and gold stocks and some of the signs to look for, some of the guideposts to think about. We've arguably gotten one of them, which is you're seeing a bit of an upturn in price. I'd love to see it validated by a higher low here coming up at some point. Finally, cryptocurrencies pretty much down across the board with Bitcoin down 2% and others accelerating to the downside a little more. Let's look at a chart of the S&P 500. Let's start our recap there, looking at the charts. Here's to orient us, this is the overall trend we've been talking about, the run up to the peak in September, this consolidation period of lower highs and lower lows, that pattern resolving to the upside. So as a trend follower, if you ask me what the trend is, it's positive. And that's not subjective, that's not a guess. That is literally based on the trends. And we have systematic ways of measuring that. So this is the market trend model that I often refer to, looking at long-term, medium-term, short-term trends based on weekly exponential moving averages. They are all sloping higher. The prices above all of them, all the models sort of firing on all cylinders. So from a price perspective, the market is in an uptrend. And again, continuing to close at or near new highs. Impressive run. And at this point, the path of least resistance, I would argue, remains up until proven otherwise, right? The market's in an uptrend until proven otherwise. And overall, it's continuing to hold up there pretty well. Not yet overbought, and I think when the S&P becomes overbought, you will get people starting to think about potential weakness and what that might mean. I'm interested to look just very quickly at the weekly chart. If there's one potential issue, it's some of the bearish divergences you might see. So the market, the S&P moving to new highs, we're nowhere near the peak we were there in September. It's not a very clean divergence, so it's not my favorite, and I don't think you could say that and a lower peak here would be much of a divergence. I'm kind of talking myself out of that one. That's a pretty subjective idea, but a divergence, a true divergence, is more like what you saw January to February with higher highs in price, lower peaks in the RSI. You really have broken that by breaking to new highs. So overall, again, trend positive. In terms of sectors, we had some little ripple in the energy leadership thesis, but sort of coming back today, up 1.5%, which is a nice upswing. You have healthcare number 2, which is actually a little different, followed by staples number 3. Those are two that have not tended to be in the top 5 of sectors, and certainly not at the top of the pack. So that's actually an interesting new little development. Real estate and utilities at the bottom, followed by consumer discretionary third from the bottom. Those were all down on the day. So overall, not a huge movement anywhere. I mean, there were not any significant fluctuations there in terms of the sectors. That's sort of the leadership picture that we've seen. Looking very quickly here at some industry themes, and if we have time, we'll throw up a breadth chart or two. Looking at the industries, fixed line telecoms, this is AT&T's group. I don't know if you've looked at that chart. It's up 4% earlier. Yeah, closed just below 4%. That's a pretty impressive run for a stock that has been very much out of favor for a long time. So getting back above 30, still not above its June high. So before we get too excited, let's remember this is coming off a pretty weak level, and end of October, along with things like financials and energy making new swing lows. So certainly looked like an unattractive spot, but you can see the rally. It's overbought for the first time in a year and a half or so, I would want to say. Not often. I mean, it's certainly been in more of a downtrend for quite a while. So a bit of a change of character, higher highs, higher lows. What's interesting on a chart like this, and what I'd encourage you to do is draw some trend lines using the previous lows. And that's a really good way on a chart like this, just to make sure you're locking in whatever gains. If you're in a name like this, I would be looking at this sort of trend line, not as an absolute, stop or anything, but just as a visual reference to, to make sure that the trend is still what you've been expecting. So that's one thing I would suggest on something like AT&T, which is rallied. The other thing is, remember that these are always using adjusted data, and that was based on John Murphy talking with Chip Anderson, our founder, years ago about, making sure that the indicators were based on pure behavior, which means you have to adjust the prices for splits, for dividends, for all that kind of stuff. You can unadjust the data though, and you just put a little underscore in front of the ticker. So if I do underscore T, it's going to give me the actual prices that were quoted going back for the last year plus. So with something that's more of a high dividend payer, adjusting or not adjusting the dividend can make a pretty dramatic change in the historical data, because usually what we're doing is adjusting all these for dividends. So something like AT&T, which pays a pretty big dividend, you'll find that with utilities and REITs and other things, it may be worth unadjusting it just to look at some of the key support and resistance levels you may want to focus on. I just want to finish off here this segment very quickly by pointing out the breadth. As a reminder, price has been up. The breadth readings are up across the board, and the cumulative advance to climb lines, again, until proven otherwise, are telling us that the market's in an uptrend. So at this point, it makes sense. A rising tide lifts all boats. Be looking for opportunities and thinking for potential upside. We need to take a quick break. Back with my guest, Dan Passarelli. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We so appreciate you joining us for the show every weekday after the close. We're going to do a mailbag segment a little later in today's show. As a reminder, you can get your questions to us via email, thefinalbar@StockCharts.com. That's the best way to get a question our way. On Twitter, just tag us in a comment at FinalBarSCTV. Finally, on our YouTube channel, just put a comment below the video you're watching. We'll capture all those questions, get to as many as we can in our next mailbag segment, which will be at the end of this week on Friday's show. I want to welcome on my guest joining us for the first time, Dan Passarelli. Dan's the chief strategist at MarketTaker.com. Dan, I really appreciate the work you've done with options, and I think of you as an educator and a trader, and very much looking forward to your thoughts.
Hey, thanks, Dave. I'm so glad to be here. I'm looking forward to sharing some thoughts and contributing what I can.
We appreciate you joining us from the Chicago area. We're starting with an option chain, and I'd love to know how you're thinking through this example with Chewy. Take it away.
Yeah, so this is kind of an interesting play. Looking at the chart, looking at the options, I noticed a couple things, and sometimes what I'll do is I'll just flip through different stocks that are on my radar, look through the charts, look through the chains, and see what pops up. And what was pretty evident with this is I said, holy cow, there's a pretty good volatility skew or term structure of volatility. And what that means is the implied volatility in the front expiration, the short-term ones, is higher than it is in all the back expirations. And when I see that, I think, oh boy, maybe there's some event coming up. So I did my due diligence, as I do on every trade. I would have done this regardless, and saw, lo and behold, oh look, earnings is coming out today after the close. In fact, it's out now, if I'm not mistaken. And so, we do a lot of work with earnings trades at Market Taker Mentoring. And so, I went through our process that we teach to our students here, and it turned out to be a pretty good trade setup here for earnings.
Got it. And I'd love to look at the chart and see how you're thinking of that trade setup going through it. Can you talk us through it?
Yeah, sure. So, you look at this, and with charts, I mean, we're all used to looking at, okay, so where's the support, where's the resistance, where's the moving averages, and we sure do a whole lot of that. But when it comes to trading earnings, a lot of that really goes out the window, because for any of you who ever have tried to trade earnings before, it is pretty darn impossible to guess what's going to happen on earnings. I mean, the stock can move a whole lot in either direction or not at all. It tends to be the biggest move on average of the quarter statistically. And so instead of going through and doing my typical analysis, again, support and resistance, pivot points, moving averages and such, what I actually ended up doing is kind of disregarding that and looking at the volatility picture yesterday, which I actually took the screenshot yesterday. The historical volatility was 70, and you see that in blue there all the way on the right. Yeah, exactly. But today, it changed pretty drastically because 21 days ago, one of the big moves kind of fell out of the calculation. And so today's historical volatility is 53. So what I ended up doing there then is I looked at what the implied volatility is in the short-term options, and it was about 120, which is super high, especially compared to that historical volatility. And notice that if I back up, like look at even a longer term expiration than I had in my original screenshot, particularly the January 8th expiration, I could have bought like, I want to say it was about a 69 volatility. So a huge disparity, and ended up putting on what we call a double calendar today. And basically what that means is if the Chewy doesn't move too much overnight, I'm going to make pretty good money on the volatility crush, where those short-term options premiums really collapse, which is exactly what I want to have happen. And the longer-term ones retain their value pretty good.
It's such a great, and I love as you're talking, Dan, it brings back very good memories of meeting with options traders in Chicago. And I was struck when I first started speaking with them about how important volatility was. The word volatility came out so much, and it was thinking about the volatility in the options, the volatility of the underlying. For someone who's just trying to get familiar with options and looks at a page like this and is overwhelmed with the data, how do you get them to start getting comfortable with thinking through some of these scenarios?
Yeah, I mean, it's the old eat the elephant one bite at a time thing,
I love it.
I mean, there's a whole bunch of numbers on the screen, and if you're not familiar with what all of them means right now, that's okay. Just learn one thing, get pretty good at it, and keep pushing yourself. With trading, the more you learn, the more you earn. And it can be a really great career for those who put in the time and put in the effort to learn how it all works.
It's a great example with Chewy, Dan, and I appreciate you talking us through your thoughts a little bit around a stock reporting earnings. I know it's a challenging time for a lot of people when you're trying to trade a name. Dan Passarelli from MarketTaker.com. Thank you so much for joining us. Hope you and those around you stay safe, and we'll talk to you soon. All right.
Thanks, Dave. Thanks for having me.
That was Dan Passarelli from MarketTaker.com, and I've enjoyed getting to know Dan and his work a little bit. And what I loved from what I had seen before is he does a great job of trying to simplify some of the different scenarios and how to implement them. I love that, thinking about a stock like Chewy around earnings and how you'd approach it using the different levers you can pull can be pretty valuable. I think, again, talking with people that have tried to get started in options, it can be a bit overwhelming, especially when there's data you're unfamiliar with. But I encourage you to check out Dan and his work and others that can help point you in the right direction. We need to continue on with our mailbag segment. As I mentioned, coming out of the commercial, we love hearing from you. Feedback on the show, feedback on your host, on our guests, anything would be helpful, but especially questions that come up as you're going through your process of trying to analyze the markets that you're doing. So let's get to your questions. First off, the Pfizer quote unquote news had been known since November, so nothing actually changed in how much vaccine they'll be delivering, but it shows you how jumpy the market is right now and how reactive it is to any news. Everyone knows it's a bubble that is ready to pop. I love that for so many reasons. And this was, this was last week as the Pfizer news came out and about the delay in the vaccine, the market sort of jumped around a little bit. The reason why I think this is a really interesting question is about how jumpy the market is. I think a lot of times people get into trouble when they say, in interviews, I do plenty of interviews, and I'm often asked things like, all right, if a vaccine comes out, what happens next. And you can try to make a guess about what the market's going to do. In the end, it's all about pricing and expectations. And overall, if I could summarize the market, jittery, I don't know, jumpy, jittery, something like that certainly makes sense. I mean, you feel like if there was something severe that came out that the market could drop pretty quickly. But overall, the other adjective I would use would be resilient, and as it keeps going higher. So when you say it's a bubble ready to pop, you might be right. And certainly there's potential for severe downside from here, just like there's potential for severe appreciation from these levels for sure. However, I would say when people say it's a bubble, a quote unquote bubble, that's not necessarily a bad thing. I thought of them as a very bad thing until I went to Fidelity and worked with some investors that have been, doing this for decades. And they said there are plenty of money to be made in bubbles. Recognizing when a bubble is emerging and being a part of that is actually a really it can be a very prolific investment decision if you do it right. I think the problem is emotions are raw and things can turn very quickly. And the end of the bubble is the toughest thing to navigate. Question number 2, I always appreciate these videos, your emphasis on data over emotion. I'm glad you got that message from the show for sure. Is there a way to search scooter rankings and filter by country of origin? In particular, I'd like to search UK only companies by scooter ranking. It's a really good question. So yeah, if you go to our scanning engine, and I'm bringing up a random scan, something about, here we go, ETFs with scooters over 90 and let's not do that one. Let's do S&P 13-week highs. We're going to edit the scan. So regardless of what you have here, so the way our scanning engine works, and again, I'm touching on this. If you want more information, our founder, Chip Anderson, has recorded some really good videos describing how to design scans and manipulate them. And so I'd encourage you to dig into some of his videos a little more. But 2 things I would point you to. Number 1, scooters are in this section here. So if you click on scooters, we have different scooter universes. So you can say the overall scooter, which means regardless of what types of companies you have, it's going to put them all together. Our StockCharts technical ranking is broken out by market cap tier in the US. We have an ETF list, an industry list, and then we have other markets, Canada, UK, and India, all separate rankings of those universes in particular. So make sure you're picking the right one that you would want. So if you do scooter LSE, that'll give you the right, the UK scooter ranking. The other thing you could do, or you could say US scooter rankings and then do companies listed in the UK. And that's under ticker properties, go to country. That's going to be the country of domicile for the company. You can also do exchange and look for stocks listed on a particular exchange. So using those 2 together, you can say strong scooter rankings, but only companies from this particular country or on that particular exchange. You can also do indexes, and we have a good number of indexes teased out as well. So that might be a good basket to look at as well. But that's certainly a really good way to use the scooter ranking system. Next question, Dave. I'm looking at the symbol summary page for DCP midstream. If you're not familiar with the scooter summary page, or oh Lord, the symbol summary page, click where it says sharp chart, switch that to symbol summary and type the symbol. It's DCP, which is either an ETF or a trust or something like that, some sort of product, I would think. Let's go on. As a CPA, I know from experience the complexities that are added to a tax return by the K1, yes, that comes from an investment in a publicly traded limited partnership. I'm guessing the LP means it's a limited partnership. It would be great on the symbol summary page if we had K1 indicated. You're absolutely right. I really appreciate that question, and I wanted to point out a couple things then. So you're right. We actually don't have it on here. I forwarded that to our development team. I'd love to see if we can get that on the page, particularly for ETFs or exchange traded products of sorts, because that's where it's going to be most relevant. If you're not familiar, the other reason why I want to show there is there's certainly a caveat emptor, let the buyer beware sort of thing with exchange traded products. We tend to think of ETFs and ETF-like things all as the same, but they're really not. There are trusts, there are limited partnerships, there are all sorts of things that are sort of thought of as essentially as closed-end funds, but they're actually different depending on the structure. And some of them certainly have tax implications. For me, I would bucket a K1 along with things like the expense ratio, fees, management fees, all of those sorts of things, the bid-ask spread, right? I mean, if you want to actually trade it, how wide of a spread are you going to get? Because illiquid ETFs, meaning they're not heavily traded and the spreads are so big that you have a huge performance hurdle just to get, to overcome the spread that you were filled at. So I would think of all of that as when we talk about exchange traded products. When I show ETFs on here, I would encourage you before you do anything, to do your due diligence, particularly with structures, because a lot of times there are unintended consequences. A K1 would certainly be one of those. So make sure you're doing your research, and thanks for that suggestion. That's a great one. Other things that you would like to see on this page or elsewhere on the platform, just let us know. This is a great way to do it over through our Final Bar email, and I'll make sure we address as much as we can. Final question we have time for. You often show relative strength to the S&P. Can you do relative strength to other things like the sector or the industry? And yeah, I don't show this as much as I probably should. You're encouraging me to do this more. But one of my favorite chart styles is this one. I just call it Gaddis. This is my friend Gaddis Rose designed this, and Grayson Rose does a really good job of using a version of this in some of his work. Tom Boley as well has a really good one showing these ratios. But on the top of his chart, these are all relative lines. This is showing you Royal Caribbean RCL relative to basically the S&P or the total market index. Next is the sector versus the overall market. Next is the industry group versus the sector. Next is the stock versus the industry group. So all those different relationships you can tease out. So here you can see that Royal Caribbean has been outperforming the overall market. It's been underperforming, consumer discretionary has been underperforming the S&P over the last 6 weeks. The group that Royal Caribbean is in, though, recreational services, has been outperforming. It's one of the better groups within consumer discretionary. The stock itself, though, has been underperforming the stock in its industry. So looking for stocks and understanding how these different lines tell you about what they tell you about the relationships is really, really helpful. You do that at the bottom by using $ symbol, $ sector, $ industry, and all combinations of those things. So I'd encourage you to add that sort of relative analysis on some of your charts for sure. That is our mailbag. Those are really, really good questions. Thanks so much for sending them. We need to wrap the show. 3 and 3 charts, 3 minutes. Here we go. Chart number 1 is looking at the equity put call ratio. I was on the TD Ameritrade network earlier this morning with Oliver Rennick talking about a number of different charts, and this is one that we talked a bit about. The equity only put call ratio is at extreme low levels, and what we're looking at in pink is the 5-day average of that over time of that put call ratio. Extreme lows in put call ratios tell you options investors are overly bullishly positioned, similar to the name exposure index being really, really high overweight equities. It basically tells you buyers are all in and they're putting their bets on one side, on the bullish side. And overall, that tends to be an extreme, and sentiment tends to coincide more with market tops than market bottoms. And so we've sat at that extreme low level for a while, which suggests to me, from that data point, we're at or near a market top. Chart number 2 is the commodity index, the DBC. There are a couple different commodity indexes we refer to, the CRB index and some others. This is one that I like to use, pretty liquid and a good representation. It struck me again on my most recent review of these charts, the run out of the April lows, what I'd call a bull flag pattern, which is a nice run higher, a parallel pullback of lower highs and lower lows. That was resolved to the upside. Then we found resistance here, broke above that. And it's just been a nice transition from accumulation to consolidation to back on the upside. And if you measure that flagpole, which is basically the run up to the pattern, and you extend that, it indicates a return back to the previous highs, the DBC going back to the highs from January. So an interesting long-term trend to certainly be aware of. Finally is the chart of Boeing BA. So obviously a local stock for here us in the Seattle area. But overall, what I wanted to illustrate is that it's a great example of a stock that has rotated higher, but it's really at a pretty key point. A lot of stocks have gotten above their June highs. Boeing is actually one that hasn't quite yet. So a couple lines that I would be drawing on this chart. Number 1 is a horizontal line right here to think about that uptrend. We've just broken above it. And the question is, do we get a follow through? Really haven't done it. Really haven't gotten it. 2 days ago was actually what's called a gravestone doji. And as you can probably guess from the name, it's not a great sign for the short-term trend. The other thing I would do on some of these charts is draw a trend line from the lows. We looked at that with an earlier chart as well. As long as stocks remain above that trend line, it tells you that the trend is in place. If it starts to break that, that's where I'd be a little concerned about further upside. Folks, that is our show for today. Thanks so much for joining us. Thanks to Dan Passarelli for joining us from Chicago. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.